Something big is going to happen into the Bitcoin, and high rate of volatility is expected for coming weeks, so make sure you are protecting your money before it happens. Hello everyone, welcome to Secret Crypto Tips. We're going to check some metrics about market that screams about upcoming volatility in crypto. Let's waste no time and get into the topic. The first part, by looking at Bitcoin daily chart, market continue to consolidate into a tight price range, and this type of change in price are making compression and can explode big on both directions. On leveraged markets, crypto in this case, people can use leverage in different ranges, usually between 1 and to 100. And the higher leverage goes, the risk of liquidation also getting higher. And this is exactly happens in highly volatile markets. People open high leveraged position, and in case of sudden change of price, their position gets liquidating. And with continue of this liquidation process, it goes like domino to liquid even more people or hitting their stops. So by knowing average of leverage for the market, we can estimate upcoming volatility is going to happen or not. We will use indicators from website CryptoQuant, which we will use it as a free user. In search box in left side, search for estimated leverage ratio and click on it. Watch the blue line. This is estimated leverage ratio and shows open interest on exchanges divided by their coins reserve, which shows how much leverage is used by users on average. And as I said before, the higher this ratio goes, the risk of huge liquidation events becomes more. And this liquidation event also causes volatility in the market. Look at this point and see average value of leverage hits new all-time high for the last 2 years. Even in 2021 bull market, we didn't see such huge value, and this is what we have to take into consideration and be aware of that. Another important metric which you can have access to on CryptoQuant, coin day destroyed. But let me first tell you what is coin day. According to this quick result from Nasdaq website, coin days refers to the total number of days that a coin has remained dormant. If one Bitcoin has not moved in exactly 1 year, then that coin would have accumulated 365 coins day. And another example, if one Bitcoin has not moved for 100 days and another 3 Bitcoin for 150 days, we have total of 550 coin day for these bitcoins. Now take all bitcoins in network into this calculation. Now we know what coin day it is. What about coin day destroyed? It is exactly opposite of coin day. Any given transaction are calculated by taking the number of bitcoins and multiplying it by the number of days since those coins were last spent. Coin day is about dormant coins, and coin day destroyed in opposite is about coins which has been transferred. Now what will occur when huge numbers of coins that is stored in wallets for a long time being moved into new wallets? Look at the chart. The significant amount of CCD in here, which means large amount of bitcoins which has not been spent for a long time moved to another wallet, and then huge bull market and bitcoin went up from 15k into the 60-ish k, and in here another spike in CCD. Not every spike in CCD signaled for a bull market. Look at this point which market collapsed after signal of CCD. CCD can be used to get informed before high volatility arrive. But is there any way to know which direction price will go after this volatility? The answer is yes. I will make a video about and will post on channel in next weeks. So make sure you like this video and subscribe into channel to avoid missing that video. Another useful metric on CDD is binary CDD, which is more simple and easier to use than regular one. If supply adjusted CDD is larger than average supply adjusted CDD, binary coin days points to 1. To put it simply, when movements of long-term holders are higher than average, this indicator shows value 1 and otherwise 0. So for upcoming high volatility events, we see number 1 on this indicator. You should not take a single value into your consideration, but multiple of that. For example, in here, we have high density of value that pointing to 1. So we can assume this condition as high volatile range. But it can be more easier to use if you enable moving averages from here. And you can see an yellow colored line has been added to the chart. Let's disable green line to gain more clear view. You can choose 7 days of moving average, 14 or any other values by your own strategies. For example, I'm using 14 day simple moving average. When yellow line pointing 1, it means market is at highest possible volatility, and for when it shows 0, it is at the least volatility mode. And focus even more on points with 0 value. Every time moving average went into the 0, this is exactly called before the storm, and it warns about upcoming huge moves for market. Last but not the least metric I want to bring you, exchange supply ratio for Bitcoin. Exchange supply ratio is calculated as the exchange reserve divided by the total supply. This metric measures the ratio of tokens reserved in exchanges relative to the total supply of the token. And there is a simple rules about this. When reserves on exchange reaches on low value, means people purchased coins and transfers them into their wallets and waiting for rise in price. On opposite side, when people move their coins to exchange wallets, it means they are looking for good opportunity to sell their bitcoins. And look at here, exchange reserves for Bitcoin reaches lowest value in the last 2 years, even lower than early of 2021 when Bitcoin topped at 65k. We checked some of the most important metrics for current market situation, and we found that market is calm right before the storm, and we expect high rates of volatility in coming days or weeks. So we avoid trading future contracts on Bitcoin or any other cryptos, or at highest risk it can be in the last 2 years. If you didn't press like button, or even worse, didn't subscribe into the channel, do it right now, otherwise you are in danger of missing next videos. Be safe and profitable. Until the next one, bye bye.